Okay, good morning, good evening, good afternoon. From wherever you're watching this video, you're welcome to my channel. I teach accounting in a very simplified manner. First of all, let me start by introducing myself. My name is Chidobi Ngozika. Yes. So today we're talking about a very important subject called a topic rather in accounting titled business transaction. My Igbo brothers, I come again in peace. They are the businessmen we have. Most time when you marry a man, you ask him, what are you into? You say, I'm into business. I'm into business. Ask what kind of business. Alright, that's in a lighter note. Okay, what is business transaction? Business transaction, simply put, in fact, let's start by saying what a transaction is. A transaction is, first of all, it happens between two persons. That is one thing. There's a supplier and there is a customer. So the supplier is either going to transfer either goods or services to that customer, and in exchange for that service you're receiving or the goods you're receiving, you're going to pay the person money. So that is what business transaction is. Business transaction are financial transactions or activities, economic event that involves the transfer of goods and services or money as the case may be, whereby you have one person being the supplier and the other person is the customer. So that's what business transaction is. Now there are two types of business transaction. You have credit transactions and you have cash transaction. Cash transactions are transactions that involves the exchange of cash. To transact means to exchange. What are you exchanging? Are you exchanging money? Are you exchanging value? Okay, so cash transaction involves the exchange of cash. Cash is exchanged immediately for goods and services. Like for instance, you go to the market to purchase some food items. That is a transaction. You're receiving the food items and you're paying cash instantly. That is a cash transaction. Are we together? Now, the two accounts that will be relevant in that transaction is your cash account and your sales account. Your cash account is because it involves cash. So you must open your cash book and record that particular transaction. What did you transfer? What did you receive? And you paid cash. Then you now have your sales account because you must have made sales in order to receive cash. Are we together? Now we have another kind of transaction which is called credit transaction. Now in your credit transaction, you are transacting, you're exchanging goods and services, but the payment will be at a future date. It's not done immediately. So that is credit transaction. And that brings me to our credit books. Now, the major books involved in credit transaction are things like your sales day book or sale account as the case may be, your purchase day book. Because whether you're doing a purchase or a sales, those transactions can be done without actual payment, like instant payment, as long as the person has said, okay, I'll pay you at a deferred period, at a later period. It's a transaction. So those are the major accounts you have in your credit transaction: sales account and purchase account. You also have your return inwards account and return outward account, and then there's some other ledgers too, but we'll get into that in more detail. But this is just an introductory class into business transaction. Alright, hope you've learned something. Don't forget to give this video a like, subscribe, and hit on the wonderful bell so that when I have new videos. Bye.